Thank you for joining today's session. We will be getting started shortly. We do have a lot of folks signed up for today's session, and we want to give everyone a moment to log on and get connected so we can dive into today's session. I do want to thank you all for joining us today. I am Jasmine Garrett here with the New Jersey Economic Development Authority. Today's session is an informational overview on the Technology Business Tax Certificate Transfer Program, also known as NOL, Net Operating Loss Program. A quick housekeeping note, we do suspect that many questions will be answered in today's presentation. However, you are able to write in questions at any point during the presentation using Zoom's Q&A feature. It is one of your Zoom command options and will allow us to make sure we are able to get back to you and let others see these questions and answers as well. Today's session is being recorded and will be posted on our NJEDA and YouTube pages. The slides and other resources will also be available in the next few days. Now, to get us started with the presentation, I will shift things over to NJEDA's Senior Director of Technology Innovation Products, Clark Smith. Thank you.
Thanks, Jasmine, and I'd love to echo thank you to everyone for joining in today's for our Technology Business Tax Certificate Transfer Program webinar. We all that are familiar with the program know it more, and the market knows it more as the NOL program, which is the more common name that we refer to it. Along with me today, it'll be my colleagues Abdu and Maya. As Jasmine noted, we're going to utilize the Q&A feature. So if you have during the presentation questions, just type them right in there. Once we come to the end of the presentation, we'll address anything that's written. And if there's time left at the end, we'll also look to open up the live Q&A feature and answer them on the fly. But with that, we'll get right into it. So for the NOL program, those not familiar, this program enables tech and life science companies that are here in New Jersey and have been accruing net operating losses. Well, the program allows you to convert the tax offset over to a credit, and then you'd be able to sell that tax credit. We set the floor at 80 cents, but it's subject to the larger general market, and they usually go in the neighborhood of around 90 cents each year. If you want to click over to the next one, we'll get right into the program. So here's the agenda that we'll be following. And we'll have a brief overview of how the NOL program goes. Then we'll get into a section where we go discuss timelines and updates around the program. Then the bulk of today's presentation will be around the nitty-gritty details of eligibility for the program. Then once done with that, we'll go into a wrap up and Q&A. So with that, Abdu, the floor is yours.
How's it going, everyone? Like Clark mentioned, my name is Abdu. I am an analyst on the technology innovation team. So I'll start off with the NOL program. As Clark mentioned, it's a program that allows qualified technology and biotechnology companies to sell the tax offset to New Jersey state tax liability created by their accrued net operating losses and R&D tax credits. The offset to tax liabilities will become a tax credit that can be then sold to another company. With the sales transaction, the losses will be transferred to the buyer and will no longer be yours. And you'll see these two bullets on the bottom. NJEDA determines eligibility. So we work with taxation, New Jersey taxation. So we determine all eligibility requirements to participate in the program. And for the benefits amounts, the New Jersey Division of Taxation will be focused on the corporate business tax filings. So if you go into the next slide, I'll go more on the timeline. So this program timeline each year is as follows. We make internal preparations in the start of the year leading to the application launch in the first weeks of May. So already in late May, it's open on the website. The annual deadline for all applications by legislation is June 30th. 12:01 is a hard deadline. At AM on July 1st is too late. So you will not be able to submit an application. It will be locked. The application will be reviewed for approval in July through August, and hopefully recommendations will be presented to our September board, and if not September, it will be October. Any application that is declined does have the right to appeal this decision. Those take place around the November timeline, and hopefully will be complete by December. And once those appeals are done, benefit approvals are distributed, and approved companies can look to close their credit sales transactions. All transactions must be closed with our closing department and taxation on that April 15th deadline. So regarding program updates for the NOL, the maximum lifetime a company can receive the NOL is 20 million, and this is the company's approved benefit amount, not how much the cash they receive from buyers. And you'll see also that 20 million, this program is subject to an annual pool. Oh wait, excuse me, I mixed the numbers up. But so 20 million for the first one, and the next one is 75 million. So the program is subject to an annual pool. If the total amount of approved benefits for all companies exceed that pool, all companies will be allowed to sell a portion of the approved amount, benefit amount. That pool is the 75 million, as I mentioned. There is also a fee structure with this. Application fee of $1,000 is a non-refundable, and we also have a approval fee. To close your benefit transaction, there's a fee equal to 1% of the approved benefit amount. This applies to benefits greater than 100,000, and there is a maximum fee amount of 20,000. Also, important to note, the application fee will be applied towards the approval fee. In the next slide, you'll see details on the eligibility. I'll also go into more detail on each of these bullets. So first, a company must meet the definition of a tech or biotech business. They also must control a protected proprietary intellectual property, own or control. They must be running at operating loss for the last 2 years. And they also, for employees, you'll see later, I'll go more in detail on each employment requirement or structure. They must employ less than 225 employees within the U.S., and they must have a minimum of full-time employees working in New Jersey. Employees must also be offered a health plan. And lastly, the company must have a taxable corporate taxable structure. So this can be a C corp or an LLC tax like a C corp or tax like a corporation. In the next slide, this is more a business eligibility slide. A company must have their base of operations in New Jersey, so no virtual offices. They must have a protected proprietary intellectual property. So I'll call it PR and IP. I'll keep it nice and short for everyone, an IP, and it must be primary to the major business. Here you see the two major definitions for biotech and technology businesses. And in the next slide, I'll go more details on the IP itself. So there's 3 forms of IPs. There is a patent somewhere in the process. It can be a submitted application. It could be in review, as long as it's active and assigned to the company. The second form would be an exclusive license agreement to a patent or copyrighted technology. So this is mostly focused on technology businesses. And the last form would be copyright registered with the Library of Congress. This is namely software and as a copyright and must be on your product itself. Some on the right in the blue highlighted section, you'll see IPs that are not allowed. So trade secrets, trademarks, copyrights, and always also on the bottom, like I mentioned, the IP has to be in the primary business or assigned to the primary business, and it must not be expired. In the next slide, you'll see the financial statement requirements. So for this program, we require financial statements for the last 2 years. This is to confirm there's no there's no operating profit for the last 2 years, and you'll see in all caps, no tax returns. We can't accept tax returns as financial statements. So these statements must be produced by a CPA or independent CPA according to GAAP. They have to be reviewed, complied, audited, and those are all acceptable forms. We require all 3 statements, so balance sheet, P&L, cash flow. We also require the front cover page, and if there's also footnotes, we'd like that as well. If you're a publicly held company, we accept 10K forms. And on the last thing, you'll see 2 years of no operating profit and financial statements is required. So for any company owning 50% or more of the applicant company. And in the next slide, you'll see more on deployments. Regarding employment, no more than 224 U.S. employees. This is for the applicant company and any company with a parent or subsidiary company relationship to the company. So that's where 50% of ownership control, so 50% of more of ownership or control exists. Um, you'll see this is the employment requirement varies off the formation date. So any affiliates, or parents, or subsidiaries will determine the amount of employees required in New Jersey. So you'll see if you are less than 3 years old, you must have a one full-time employee working in New Jersey. If you are in between that 3 to 5, you will need 5 full-time employees. And if you are over 5 years, they will require 10 full-time employees. And you'll see a little green text here on the bottom. We cannot accept Pennsylvania residents as they're not subject to New Jersey gross income tax. So please keep that in mind when you are trying to reach that employee count. So the minimums are, like I mentioned, the minimums are based on the years in existing for the applicant company. This measurement begins with the applicant's earliest formation date and is measured against the deadline of June 30th. What's the definition of a full-time employee? Um, the person must be working 35 hours a week, um, receiving compensation that's subject to taxes and namely withholding, and they need to spend at least 80% of their time within New Jersey itself. They have to be offered health coverage. They're not required to take it. They can opt out, but the company must offer it. Um, excuse me. Okay. So you'll see on the bottom, a full-time employee can't be a contractor, an intern, or a temporary employee. And also, we want to emphasize the Pennsylvania requirement, so they are not accounting that total. So here you'll see the application to the program. It's already listed on our website. It's available and it will be submitted through the online system. The deadline, like I mentioned, is the hard June 30th. Um, if it's not submitted, then we cannot accept it. So all required documentation must be submitted by that June 30th deadline. Any missing required documentation, like financial statements, cannot be accepted after that deadline. We can only take clarifying information. And please submit early as possible. This is a long process for the application, and we don't want it going over that deadline. Here you'll see some important pointers regarding the application. You'll see in the first bullet, we want to ensure that the taxpayer identification number, so EI number, or the entity, is filed with the New Jersey corporate business taxes. So they're both like the same EIN. All documents must be uploaded, including parents or subsidiary documentation. If you are a third party completing the application, so a consultant or an advisor, they will have to select that option in the application, and that will change the application itself. And also in the application, you'll see you have to enter each type, so NOL and R&D, and accrual year separately. Commingling types and years is not allowed, so I would say make sure you list out each one that you are looking to sell off. Lastly, the application, when you're looking to complete it and you're at the end, please ensure that it's at the end of the application. The payment screen is not the last screen. There's still more to it. And here you'll see how the estimate potential benefit works. So for an acquired amount of 5 million in losses, the tax offset comes from multiplying the loss by the max New Jersey corporate tax rate, which is 9%. If the total of all approved benefit for the program is less than 75 million, the amount will be available to sell. If oversubscribed, every company benefits will be reduced slightly. I'll go more in detail about that in the next slide. The benefit is sellable. This is how a company would turn their benefit into cash. They sell at a discount. So like Clark mentioned at 80%. This program requires at least at 80% a dollar, but they usually range from the 88 to 92% on the current market demand. I would also just note the application. Like I mentioned before, they have to list out each year for their losses. They can't aggregate. So in the next slide, here is the annual allocation for the program. Like I mentioned, is a full 75 million. If the program is oversubscribed, it means that total of all approved benefit amounts for the approved companies exceeds that 75 million. So if that's when it's oversubscribed. We must distribute this pool across all the approved companies. So every company will, if they're approved, will get a benefit. It is structured as like a waterfall between two pools. The first is that 15 million distributed among the companies located in opportunity zones, innovation zones, or if they're a minority woman-owned certified by New Jersey. If that pool is exhausted and companies remain, they move to the general pool with all the other approved companies. If all the company's benefit amount is fulfilled, the remaining funds are added to the 60 million general pool of funds. In the next slide. Here you'll see a recapture of the text. Approved and closed benefits can be recaptured for this program. When would that take place? If a company leaves within that 5 years of closing your benefit package, you'll see these 5 years of sale. If you are leave the new state within 1 year, would capture all 100% of it, and as it goes on, you'll see that 5-year mark. The only exception is if the company goes out of business or liquidation. Here you'll see on our website, like I mentioned, the link is on our website. Please budget your time as it takes a while to complete the application. We have a lot of important documentation and information that will be helpful for the application. Like I mentioned, at a glance is a quick review, quick breakdown if you want to have a quick summary of the program. There's also a frequently asked questions or FAQs that has almost every question you can think of and a list of other documentations as required. In the next slides, I'll go mostly on the supported companies. I have 3 companies here. First is the Princeton New Energy. They are Bordentown based and they are a clean tech company. So they received non-dilutive funding through the NOL program. And they also received other programs such as the sister agency CSIT, Commission in Science and Technology, and also an MVE, Small Business Grants, and a lot of their investors received the Angel Investor Tax Credit if you are aware of that program. These are all stackable as long as you meet those eligibility requirements. In the next slide, you'll see the other company, and this is Oishi. This is a Jersey-based technology company, and they are agritech. They also received a non-dilutive funding through the NOL program, and they also received a $500,000 in funding in the New Jersey Manufacturing Voucher Program. And the last company I'll touch base on is the Princeton-based life science company named Curia Digital Therapeutics. They have used a lot of our programs, such as CSIT, ATC, Angel Match. It continues, and they've also took advantage of non-dilutive funding through the NOL program. And now I'll pass it back over to Clark for closing. You're muted, Clark.
Thank you. Classic Zoom mistake there. Great job, Abdu. Appreciate it. Folks, don't be shy if you have questions. You go right ahead and type them into the Q&A section. I will address a couple of other questions I know that come up fairly often, as well as just some follow-ups from Abdu. So I think very important, the application is up and live right now. And it is due by June 30th. So very important to submit it by June 30th because when the clock strikes midnight, it locks and cannot be submitted. If you can apply early, that's helpful, as Abdu mentioned. We can't take any new information after the deadline. We could take clarifying what does that really mean in practice. If you forget to upload a document, but you've applied on May 25th, we can still accept that if you send it to us manually for another few days or the whole month, right? But if you don't upload a document and it's now after June 30th, the most common one happens is people have uploaded their tax returns and not CPA financial statements. Come July 1st, we can't take them anymore and it would be a decline. If you'd like to get a hold of us, the easiest way always is based off of that innovation@njeda.gov email address that covers all the bases because it loops in all of the team. Another thing I'd like to mention, while being taxable, i.e. taxed as a C Corp, is not eligibility for NOL, right? You won't be declined if you're an LLC. But if you're not a taxable structure, you're not going to have any benefit. So keep that in mind. C Corps or companies taxed like a C Corp are accruing losses. If you're any entity that's structured as a pass-through, there is no loss accrued in your business because it's passed through to your owners. Every so often, we have folks that apply that they're subject to this, and we have to give them the bad news that they are approved, but taxation has come back and told us that their benefit is zero. Um, Around the PPIP, when we're talking exclusive license, what does that mean in practice? Well, that's typically companies that consider themselves like a corporate spin-out and have technology from another corporation licensed to them, or university technology, which has been licensed to them. Key though, it has to be exclusive. When we talk employees, the key always is Pennsylvania residents do not count for this program. And then the wrinkle also, most EDA programs are basing employees off of percentages. This is based off of minimum amounts, a minimum amount in New Jersey and a maximum in the US. Um, Health insurance, uh, key thing here, some folks now use those health reimbursement plans. That does not meet the legislative definition of health insurance. But as Abdu mentioned, you do not have to have a health insurance plan in place and used by your employees. The key here is offered. So if you have all of your folks opting out or maybe utilizing a health reimbursement plan, you just have to have something provided to us that shows the program, a health insurance plan that would meet the definition that you would put in place if anyone demanded it. Um, Another important one that's a little bit different, we've been using a new application system for the last couple of years. Important with that one, as Abdu noted, if you're a company and doing it yourself, there is one option there. If you are a third party that is doing it separately from the company for a fee, there is an election question in there. You should choose that function because it has a little different methodology there, which allows you to complete it, but the company to certify. Um, and with that, I'll hop over. The first question I see here are footnotes to a compiled statements required or optional? So they are required, but I say we default to the accounting firm. So when we look at any of the statements, right, it has to be a full financial package. And the key there is that it has the CPA's firm report or cover page on the front saying that everything is meeting whatever standards based off of the form of the report. So if the independent CPA is saying that there was notes needed, they should be, and are certifying to it, they should be within there. We have seen at times that CPAs are saying there are no notes and it is meeting the standard. That's how we look there. When we look at the next question, it's around innovation zones. Really, the boundary is fixed. It is legislative, and it can be as detailed as you're on one side of the street, and that's qualified, and across the street, that is not part of the boundary, and it is outside and is not qualified. Unlike other programs, there isn't a bonus for saying being in an innovation zone, opportunity zone, or certified, like some other programs, right? You'd be entitled to maybe a larger amount. That doesn't happen in NOL because the benefit itself is directly tied to your accrued losses. What that being in one of those classified areas does is put you into a different class for the allocation process. So if we have less than $75 million worth of requests, this really doesn't come into play. We haven't had that in the last couple of years. Anyone that requests and it gets a benefit, it gets approved by Treasury, everyone will be able to sell their full accrual. If we are oversubscribed, the way that it works is, well, those IZ, OZ, and WMBE companies are in the first pool. So there is a process of how that first 15 million is divided amongst the people that are in that qualified first pool. If they get all of their request and there's money left over, that money goes over to the general pool and we do a similar process again. If they are not all fulfilled for their total requests, they then move into the general pool with everyone else that's approved, and then we split up that remaining amount amongst them. So that's kind of the background around the IZ, OZ, and WMBE elections for a company. So if you're relocating from overseas or even just from another state to New Jersey, um, the benefit amount is tied to New Jersey tax filing. So that's important, right? If you haven't been filing New Jersey corporate tax returns, you're not going to have a benefit accrual yet. It's not based off of federal, but the running at an operating loss, actually, it's a little confusing. The definition is um, no more than 2 years not running an operating profit, but it is going to be subject even if you're not in the state. So if you're over than 2 years old, you or your parent company or subsidiaries to, that whole suite of companies will have to have been not having any operating profit in the last 2 years. We verify that through those financial statements. Um, but that said, eligibility isn't tied to like your tax filings. Obviously, if you haven't filed in New Jersey, you're not going to have a benefit. It also is not subject to being in existence, right? Like if you haven't operated and weren't doing any operations prior to 2025, you're not going to be penalized for that. When it comes to actually selling the credits, we're not allowed to, based off our ethics requirements, be involved in the selling transaction. That said, we do maintain a list of companies that hold themselves out to be buyers of the tax credit. We keep that on the website. There also are third parties out there that make a market for selling credits at a fee. But we have the list. You can reach out to those different folks to see if they're open to buying them that year. Our side of that is once you've found a buyer, there's some closing paperwork that needs to be done and submitted back to the EDA. And we make sure that the transaction is all in order and that money exchanges hands. And then on the back end, losses go from the seller to the buyer. Um, so one of them is that they're on the company is asking around extensions for their 2025 taxes. It doesn't pose issues from an eligibility standpoint, but it could pose an issue based off of your benefit that's available to sell. Meaning, if you haven't filed your 2025 CBTs with Treasury by June 30th, it's highly unlikely that you'll be allowed to sell any benefit that was accrued in 2025. That's because Treasury confirms them and they go based off of what is in their system. So if you haven't filed 2025 by June 30th, that's not going to impact you from an eligibility standpoint, but probably fairly likely, you would not be able to sell any of the benefit that was accrued in 2025. Now, one thing we didn't mention, but it's very important, we follow the tax carry forward laws. So even if you didn't have benefit available to sell in 2025, you can sell benefit that was accrued 2024, 2023, and so on back. So wouldn't be a total loss, but yeah, it's best to try to get in your 2025 by that same June 30th deadline. Next question we see is, can family members be considered employees? Yes, but I would say they have to be actual employees. We will investigate that further, right? You can't just hire an employee, a family member, maybe a child, as an intern for the summer and have that count. Especially if they are new hires, we will collect more information around their employment just to confirm that they are a legitimate full-time employee, right? Because it is not out of the ordinary to have family members that are all in the same industry, all in the same company, and all full-time employees. We just double check to make sure that the employee is meeting the standards based off of the legislative definitions. Also worth mentioning, we verify the employee headcount and eligibility requirements at 2 times. So you need to meet the program requirements at June 30, then also when you go to sell those benefits, which would be anywhere from the November timeframe and up to April 15th of the next year. Yeah, I see. I think it's more of a comment just for compiled footnotes are optional for the CPA. So it's really going to be between the company and the CPA of what they decide. Let's see, this one's around June 30. Okay, so this one is around basically the end of the fiscal year for a company and what financial statements are due. Um, Most companies use the calendar year as the end of their fiscal year, but not all. Um, there is a Q&A on our website around, or not a Q&A, an FAQ specific to this one. The deadline for 2 years worth of financials is March 31 or the end of the first quarter of this year. So if your fiscal year ended between March 31 and June 30, we wouldn't require that one. So you'd be looking at the 2 year period starting for 25, June 30th, 25, not June ending June 30th, 2026. And I'll answer that one offline as well in some more detail because it can be a little nuanced. Um, Okay, so the next question is around R&D credits. So the program allows you to sell accruals of both net operating losses and also R&D credits if you do that separate R&D filing. It follows the same rules for how many years as NOL. So you can go back 20 years worth of R&D credits and look to sell them as well. There will be a little bit of difference around how the benefit is calculated. So, right, you're selling here not the actual accrued losses, but what the tax offset to liability would be based off of those losses. So if you're doing strictly NOL, we will certify, well, Treasury will certify that loss amount, and then we have to calculate out what the tax offset would be. When it comes to credits, R&D credits, we say it goes for 1-for-1, not because R&D expenses are more weighty than NOL. It's because it comes from your tax filings. That calculation from expense to tax offset is already done in your New Jersey level filings, right? So NOL is a line item in the CBT, and if you're doing R&D credits, that's a separate form that needs to be calculated out. So we don't have then also subject to an additional, 9% of that amount. That said, yes, high level, you can sell both R&D and whatever the amount is created by NOL, you can file and request to sell back 20 years. The important part always in the application when you're doing it, you'll notice you create a matrix where you select the type, either R&D or NOL, and the year. And it's very important to put in each one correctly and not commingle them down to just one final number for 2025. So if you have benefits accrued back, let's say 3 years, you want to make sure that you specify that you want to sell X amount for NOL for 2025 and Y amount for R&D for 2025. Then go back and do 2024 NOL, 2024 R&D. It can be an estimate. So if you say that you want to sell 1 million and it comes in $1 above, $1 low, I'm being just very general, you will be allowed to sell whatever that actual amount is per treasury. But if you don't put anything in there, we can't allow you to sell it, right? So if you commingled everything into 2025 number, well, even if you have 2024 availability, you're not going to be allowed to sell it because you didn't request it. And yeah, when we're talking around benefit amount, so if you filed as your 2025 return um, on an extension, so right, it didn't go on in by April 15th, 2024. It went in later, like April 30th, 2020, or excuse me, June 30th or October 15th of 2024. Those would be counted for you. So this question is around that they've accumulated losses, but they've had some grants that have been considered as income, um, and it might show profit. Well, that's really all about how the accounting was done if we're talking about eligibility. Um, Devil in the details of how do we determine if a company is meeting 2 years of no operating profit is we don't actually look at the bottom net income line. We'll go down from revenue through the fixed costs, and then we'll go down to the next level where they factor in operating costs. That line is what we're looking at, the operating profit, operating income line. If it is a positive number for the last 2 years, you're not going to be eligible. If they are both negative, then the company would be eligible. Why do I say it's all about the accounting, right? Because this does come into play, right? Where people then have below that line additions that will make them have a profit, show a positive net income. We're not looking at net income. We're looking at that um, operating line. My suggestion there is if you have your returns or you have your statements already done, even in draft, reach out to us at the innovation mailbox, and we still have plenty of time to take a look. While we can't say if it would be eligible and accepting, we can flag it and give you our perspective if we think it's not going to be eligible. The next question that I see is around does participating in New Jersey NOL prevent us from any federal level programs? I don't know 100% here, and I would definitely consult with your accountant. My gut would say no on the federal level because we are not um, doing anything with your federal CBTs. Everything is on the New Jersey level. So if we're talking about does this affect your New Jersey level accruals, yes, those losses would be moved from your corporate entity to the buyer corporate entity. Um, Another common question is around tax liability. Is the sale of NOLs considered a taxable event and have to be recognized as revenue in your next year? On New Jersey's level, yes, it does. Yeah, we can show you how we follow up afterwards around the R&D portion. I want to say the benefit itself is going to be, if it hasn't changed, it's in your New Jersey CBT attachment form 306. So we'll take a look there. Yeah, so employees, when are they eligible by? If you're just hiring your first or onboarding and starting payroll this year, that's fine. They have to be on board by that June 30th deadline, right? So if you're only subject to one New Jersey employee, those people have to be hired on payroll, receiving those taxable wages by June 30th, also being offered health insurance as well. We'll check again when you're selling the benefits that you're still meeting that minimum requirement and you haven't gone over. Um, we understand that, right? Like if you hired someone in April, they're not going to show up until paperwork, when we're saying actual filings, maybe that's the WR30 or you're using a PEO, your federal filings won't be available at that time. We're aware of that, so you should put information in around, the W4. There are some filings that show that it has started, and then we can collect the final um, documents after June 30th when we're reviewing it, because that would be clarifying information for us. Um, can local LLCs apply? Yes, but I would suggest only if you file your tax returns as a C corp, being taxed like a C corp, right? Where you have corporate business tax liability. If you are still taxed like a partnership or a pass through, where losses are passed through to the owners and used on their personal income taxes, I would say I would suggest not applying, right? Because what's going to happen is even if you meet all eligibility requirements for your company, you'll be approved to participate in the program, but you will have a benefit of zero. So you won't have anything to sell. Then the next question I see is, does the company funding ACA premiums count as a health plan? No. So that would be considered a health reimbursement plan. The reason why it doesn't is that um, this is a legislative program, and in the legislation it specifies um, around the health insurance plan, specifically what it has to meet. There are actual laws around what constitutes a health insurance plan. That said, it doesn't make you ineligible. You would have to speak with um, a health insurance provider out there and obtain information around a qualified group plan, and then share that with us. Um, because the understanding would be if your employees wanted to have insurance, right, you have to offer it. This is what you would offer. This is what you would put in place if someone did come and say that they wanted insurance. That kind of comes to the end. Let's see if we're popping over to the other one. Um, we're right around 12:40. If there's any other questions, feel free to ask. We'll leave it open for maybe a little bit more time. I'll think if there's any a little more tips. The only other thing that I had noted here also is around recapture. Um, as Abdu mentioned, recapture of your benefits, it's over a 5-year period, and it applies specifically to leaving the state. So closing your office and having no New Jersey employees. Um, if you fall below eligibility restrictions, that does not trigger recapture. All that means is you're just not eligible to keep participating in the program in future years until you go back above and meet all of those eligibility criteria, right? Um, that happens fairly regularly, especially when we're talking about 10 employees, right? So if come next year you only have 9 employees, well, you're not going to have to pay back your benefit. You're just not going to be eligible to participate. Um, but another important qualification or important note around the recapture that does come up is that the benefit does transfer if you ever sell your company to the acquirer. So worth having in your back of your mind that 3 years from now, if your company is sold and the acquirer decides to shut down all New Jersey operations, your acquirer would be subject to that recapture. I see someone that says they had hopped in late. There is a recording. In addition to sharing the slides with you, we are recording everything here and it will be posted to our YouTube page. We'll share the link. The link will also be posted to the NOL website. Yeah. Um, there was another question around if you're on extension. If you do not file your 2025 returns by June 30th, that's not going to make you ineligible for the program. It's just going to mean you're not going to have 2025 benefit available to you to sell. So if you're a company that's been filing in previous years, right, you filed your 2024, 2023, 2022, the benefits that were accrued in those years would be available to sell, just the 2025 would not. And with that, I guess I would say to my team here, do you think I've missed anything? Abdu, how do you think?
I think you
Think there's
covered it
anything?
all.
I think I did cover most things as well. If it's not popping in my head right away, it's probably going to be a one-off. Now, again, folks, we're very hands-on when it comes to this program. If you think it's for you and you have questions, please reach out to us. Please send us an email. Even if you forget that email address, it's on the website. feel free to send us things and reach out sooner than later, and we're more than happy to assist getting those applications in. So with that, I'd say thank you very much for attending. Enjoy the Memorial Day weekend, and just leave you with, yeah, please, any questions, just reach out to us.